afternoon. This is Brian Shannon speaking from Alpha Trends Blogspot. Thanks for viewing my blog. If you're seeing this video from somewhere else on the web, please do take a look at my blog, alphatrends.blogspot.com. You can find some good ideas there for the stock market. What we're going to do today, as I promised yesterday, is take a look at some ideas that potentially have the ability to bounce next week. The market's experienced a severe sell-off here the last few days, and looking at the NASDAQ composite, you know I've been looking at the NASDAQ 100 a lot, and the NASDAQ 100 did make a year low, new year low. For the NASDAQ composite to do that, it's going to have to drop quite a bit further down towards this level. Right now, the NASDAQ composite 200-day moving average, and we can see that better on the weekly time frame where we have this green moving average, is at 2232. 2232 is where that 200-day moving average is. Now, a lot of times when the market kind of is in a free fall like it has been the last couple of days, people have nothing else to really look at, so they look at these levels of support potentially from moving averages. I talk a lot about moving averages, not because I like to use them as a system, but because they oftentimes are a good reference point. And what happens at moving averages is in particular a significant one like the 200-day moving average a lot of times on this weekly time frame, is that you'll see the sellers, after a few severe days of selling, will see the market start to approach that 200-day moving average. And then they'll say to themselves, well, I'm not going to sell any more here because it's approaching that 200-day moving average, and that 200-day moving average often acts as support on these pullbacks. So they stop selling. That means basically what? It means less supply available in the market. We've got another group of people, maybe some short sellers who are looking at that 200-day moving average saying, I'm going to start to nibble on covering my shorts as the market approaches that 200-day moving average. So that brings in what? It brings in more demand for the market. So with less supply and more demand at that market, what we often see is that these moving averages will tend to act as certain levels of support in an uptrend or resistance in a downtrend. We can see how the 20-week moving average right here, or the 100-day moving average, did act as support. Earlier it was the 50-day moving average, and they're not precise by any means, but they're just an area where we want to get used to looking at the market for potential levels where we want to take a look at a shorter term time frame. And the market now is getting pretty sold off, and it's time to start thinking that it's probably too late to be selling short right now. So you don't want to be selling short any new ideas at this point. Maybe there's a few opportunities out there. I'm not going to look at them today, though, where the risk isn't as great. But generally speaking, I think that the play early next week is going to be to look for a bounce. And when I want to look for a bounce, what I want to look at is I want to look at some of the, what have been strong stocks recently that have sold off hard. One stock that fits that bill is AVCI Systems. AVCI gapped up on huge earnings surprise, and it's been pulling back. Let's take a look at this weekly time frame to see that we do have still a very bullish picture here for this stock. So I think that now that this selling is starting to slow down a little bit, in particular for AVCI, that maybe clearing above Friday's high of 655 will put the buyers back in control a little bit. Let's see if it can make a higher low and hold maybe above 640 or so, and then get above that green moving average there. So AVCI, I would say you want to keep an eye on for a potential bounce. I had mentioned Friday ATHR Communication, ATHR, and that put in a nice green candle. It had a pretty decent day in an overall horrible market. Very bullish. Starting the trend here. The stock has been riding that 50-day moving average. It came down to the 20-week moving average or the 100-day moving average, and it's starting to find a little bit of intraday support. I think you're going to see probably a pullback down back under 22, and then as it breaks back above these highs at 22.5, maybe we get a bounce up towards the 10-day moving average, which is this green one here, this short one. It's at about 24.5 or so. So I think that ATHR is a good bounce candidate. All these ideas that I'm going to be mentioning, by the way, have big volume, they have strong relative strength, and they've sold off pretty hard recently. It makes them probably, I think, the best candidates for a bounce. Avaya fits that bill too. Had a nice weekly breakout at about that $12 level right here where it broke past many weeks of resistance on heavy volume. And now the volume on this sell-off hasn't been as strong as we saw it was on the way up. It failed to hold support at the 10. Now it's down to the 20-day moving average. And what we're going to need to see in here is for a little bit of stabilization in here. It's still clearly in this stage 4 downtrend and no reason to be a buyer quite yet. But this is one you want to keep an eye on for Monday, Tuesday, and probably Wednesday of this coming week. Best buy, BBY. And I meant to mention all these symbols. I'll try and remember to do that from now on. But best buy is coming down to, we can see on the weekly time frame where it had held so nicely above that 10-week moving average, which again is the 50-day. Now it's finding, it's not finding support, but it's pulled down hard into that 100-day moving average. Oftentimes in an uptrend, first the short-term moving average acts as support, then the intermediate, and then longer term as the trend becomes more mature. But it's had a very steep sell-off from a high of 58.55 last week down to 52.60 in here. Still a real steep downtrend. So I'd wait on this, but I like to see this big volume near that comes in at the end of this move. It means that perhaps the old saying goes, big volume without further downside equals accumulation, and just the opposite, big volume without further upside equals distribution. So what else do I have here? Ballard Power, BLDP. The fuel cells had been hot. This stock broke out past multi-year highs just a couple weeks ago, had a real nice rally. Now it's pulling down to its 50-day moving average for the first time. So let's take a look there. And we can see there's that rising 50-day moving average. And let's take a look at the intraday time frame to see if we can get a better view. And still, this one, same thing. Big volume, though, and a green candle towards the end of the day, but still a real steep sell-off, needs to stabilize a little bit further. Broadcom, I'd mentioned that on Friday. The stock is trading down at its rising 200-day moving average. If you look at a longer-term chart, look at the significance of this breakout and where we are now in this overall bullish picture. Let me change that. So we can see the significance of that breakout past 32 or so, and now it's testing its 200-day moving average for the first time, and it's come down very steep very quickly. I think you're going to have to see the stock get up above 37.10 or so, 37.20, and then maybe we can see it rise up towards $38, $39 a share, somewhere in there. Again, all of these ideas, though, are very high risk this week, I think. And if you're not a disciplined trader, if you're not a trader, you're better off on the sidelines. Brightpoint Inc. came down real hard the last 3-4 days. Now it looks like it's finding a little bit of support in here. Maybe it makes another a higher low rather, comes down to about $25 a share, and then if it can punch up through that $26 level, perhaps it can rise up to meet that 10-day moving average somewhere around 29 as that 10-day moving average declines. CTXS, Citrix Systems. Here's a stock that on the daily time frame you can see they had an earnings surprise here. It pulled back on light volume. Then the buyers took control. It's come down to the 20-day moving average. Let's take a look at that. We can see beautiful stage 2 uptrend followed by distribution, stage 4. Now here we are accumulating in the stock. And I think above Friday's high, 41.42 or so, that's where we can start to see it bounce, maybe up towards that 43 or so, up towards that level. I've got about 2 minutes left here. Let's take a look at Netgear. And Netgear, I think this was an earnings surprise. I'm not sure. I would say that because today's Saturday, take a look at these stocks. Just look at a few headlines on them and see if there's any negative news out there. You want to stay away from the ones where they missed earnings and came down hard. Companies like Microsoft, Electronic Arts, those types of stories. They've come down. They'll probably stay weak because there's a reason for the selling in there. Whereas the reason for selling in some of these stocks is that the market just got hit real hard and it dragged everything down with it. So these are going to be, some of the better stocks, some of the first stocks to bounce, in my opinion. So maybe back above 23 on Netgear. I'm running out of time here. Sorry to make it so short. Again, this is Brian Shannon speaking for Alpha Trends. Please visit my blog. These, again, are not recommendations. They're just ideas, potential things to look at. So hopefully we can make some money next week. Remember, preservation of capital is most important in this type of environment. Make sure that you still have your capital available to trade when the risk becomes less. And clearly the risk is very high right now. Thanks for your time. Have a great day.